Good day, traders. Welcome to today's episode of my weekly Forex Forcast. This is Ononakoto Chukwu speaking for Lazarus Capital. So let's just go right into the charts. So as you all know, for now I trade the BTC USD, the Euro USD, the gold, the Nasdaq, and the US oil. So we'll be starting with the BTC USD, as usual. So like I told us, the BTC USD, we are looking to sell the BTC USD as the BTC USD is still in the downtrend despite this consolidation that we saw here. And yesterday, last week, we saw this move to the downside, but I still think that the BTC USD have not gotten to the area where it wants to actually drop from. I told you guys that once the market is about to drop from a level, it first of all creates a false resistance. If the market is looking at dropping from a resistance area, it will first of all engineer another resistance so that traders can come in from that resistance area so that it can build up liquidity. Then what you see that the price will go back, take out all those people that are trying to use that resistance area that the market built, take them out before starting to go down. So that's what I think that the market did yesterday when we saw this move to the downside. I think eventually that the market is still going to rise back up here. So we bought the Bitcoin as usual from this point up here. We're expecting for the price to rise up above this area, but it got here and came down sharply. So I'm still expecting to see a buy move. I'm still expecting the Bitcoin to rise from this point back up before coming down, because if we check out this move, this move from here to here that created this move, you can see price pulling back to Fibonacci, our Fibonacci area. You guys know for now that I use the Fibonacci a lot. This is the 61.8 Fibonacci of this move from down here to this point, and we know that the 61.8 is a very strong area. And if you look at this move, you can see that it is a resistance area in the past that acted as a strong resistance area. You can see resistance here. So I think eventually that this level is going to come back and act as a support for this price to go back up. So I think the BTC USD, it did as if we want to start coming down last week, but it actually have not gotten to the location where it wants to come down from. So in the coming days, we're expecting to see a rise to the upside for the Bitcoin. Let's take the Fibonacci from this swing from our line of departure. And I told you that this is our line of departure. As long as this line holds, we are bearish. All this move that is happening here, all this consolidation that is happening here, belong to this guy here, this supply area that the price came down from. All this move here belongs to him. So as long as this supply area is still holding, we are bearish. So in the coming in this new week, I'm still expecting the Bitcoin to rise back to this area where I've been telling us that we are looking to buy the Bitcoin from. So when the Bitcoin rises to this area, that is where we will attempt the sell. I'm expecting the Bitcoin to come into this zone. All these early sellers, I'm expecting the Bitcoin to rise above here, stop all of them out before going down. But nevertheless, in the coming week also, in this coming week, if we see a buy setup at this place, we will buy the Bitcoin. You can see this move, from here to here is a good move. If the price gives us this entry at our entry window, a clean setup, we will execute, we'll take advantage, because this is a lot of pips, that can do you good. So we'll be looking at buying the Bitcoin from this location. Where's my line? Okay. If price drop back below, if we see a drop below here, and they pull back to the upside, we'll see a drop below and the pull back, we'll buy the Bitcoin down to this point. If we see if the market come down, the buyers come, we'll buy the Bitcoin from this level and take it up. Nevertheless, for the main entry for the Bitcoin is the sell entry. So we'll be looking at price, the Bitcoin to rise back to this level. From here, we'll wait for the sellers, then we'll sell. Remember, I've been telling you guys that we plan to sell the Bitcoin. So what I think the Bitcoin has done, it has engineered another resistance area. You see, it engineered resistance a fake resistance here, he stop them out, engineer another one at this point, he stop them out. This ones now, it will stop them out. Then from there we'll see the Bitcoin, going down, to the downside. That is, when we execute. Stop loss, as like I told us earlier, will come here. The TP1 will be at the higher time frame location I showed us at 50,000. So I don't know whether we will get this set entry in this coming in this new week, but the first thing we'll be seeing is that the market has to rise to this level. The market rise to this level, then from there we will short the Bitcoin. Then if you get a clean buy setup, you can buy the Bitcoin from here. It's a significant move. Why it is going up, you can buy it because the market is consolidating here. So if you get a clean buy move, you can take the buy move to the upside. And at this point, when the sellers kept coming, exit your buy and sell, just like what we did here in this week that just ended. So, and there's another thing again, I'm even saying, the trend line traders, their trend line is still holding perfectly. Just that you guys know, for now I don't use the trend line because it's not a tool that represents price very well. But if I can see that, one thing you need to understand in the market, that even if you are not using a strategy, you need to understand how that strategy works, because the market is comprised of a lot of different players. I repeat, the market is comprised of a lot of different players. There are people who are trading the chart pattern. There are some are trading fair value gaps, some are trading order block, some are trading trend line, some are white calls, SMC, name them. Is there ITC or something? So you must understand how these different market players, how they think. The institution, the big boys, you must understand how everybody thinks. So that will enable you. If I'm playing a game with you now, if I can know your next plan, it will help me to predict. If I can predict your next plan, your next action, it will help me in making my decision. Yeah, so that's the thing. So that's why when you're in the market, because you understand how these games are, how other market participants, the strategies they are using, it will help you in making your decision. So I can see that the trend line traders, you can see there's a touch here, there's a touch here, and there's a touch here. And this area that is touching, this place now, they call it the third touch of the trend line. And if you know how trend line traders think, they don't joke with the third touch. They will tell you that the third touch of the trend line always does the trick. And not only that, there's a trend line touch here. This area is also a good Fibonacci area. I've done the Fibonacci for you guys before. It's a good Fibonacci area. You can see 61.8 is there, and also there is a support. You can see this is a support. It was acting as a resistance here, resistance here, resistance here, come back. So there is a lot of confluence here. Trendline traders are there, Fibonacci traders are there, support and resistance traders are there. Even the EMA traders are also there. I don't know who else is there. So if you get a buy setup from here, it's a good one. It's a game of probability, and you can see even the risk to reward is even nice. If you take from here, if you take from here now, even if you enter from here, if you enter right away now, your stop loss will be just below here, and you target this place. You can see this is almost like 1 to 3, so it's a good one. So if you get the buy entry for the Bitcoin, if you get the buy entry for the Bitcoin, you can take it while you are waiting for the sell setup at this point. So in the coming week, personally, I will be looking to buy the Bitcoin. If I get a clean setup at this place, I will buy the Bitcoin. Then when the market rise up to this area, I will exit my buy entry and wait for the sellers to come in. Then I will join them. So for the Bitcoin, we'll be looking at buying the Bitcoin at this place. Maybe when the market drops a little, when the market drops down a little, we can buy at anywhere around this place down that I'm highlighting. Then just TP, take your TP at this place and wait for the sellers to come in. Then when the sellers come in, you join them. Your TP1 will be down here at 63,869. Then your TP2 at 50,000. At 50,000. So because what I'll be doing for the TP2 is just to use my trend, my Fibonacci ABC pattern. If I take this one leg of the Fibonacci, this is the pullback, and from here to here, if I take this, you can see this is around almost 51 something. So that's how I will be exiting at, my TP2 will be at 50,000. So that is for the Bitcoin. For the Bitcoin, if we get a buy, if you get a clean buy setup at this support area, you can buy the Bitcoin. When it rises to this place, you exit your buy, wait for the sellers. When they come in, you join them. So let's move over to the next pair, which is the Euro USD. So for the Euro USD, my bias for the Euro USD is to the downside. The Euro USD is currently, bearish. This is our line of departure. As we all know, I did this analysis last week for us, so I just want to do a recap of it. So as we all know how I trade for now, once I've identified my line of departure on my 4-hour time frame, once I've identified my line of departure on my 4-hour time frame, I want to look, is the market bearish or bullish? Once I see that the market is bearish, in the case of Euro USD, the market is bearish, I want to see where the market dropped from, the line of departure. You can call it the supply area. This is the supply area. This is the line of departure. So once I've identified that area, I want to see the market pull back to a good resistance area. As I can see, I'm seeing a good resistance area at this point. Market pull back. I've seen a good resistance area at this point. Then I'll take my Fibonacci to confirm that that area is actually a good one. If I take my Fibonacci from here to here, you can see that this place is 5061.8. So I can see that this area is a good resistance. If I look back, this zone, I can see that this has acted as a support in the past. Support in the past. Acted as a support, so it will be coming back. The market will use it back as a resistance area. So what I will be waiting for is the market for the Euro USD to rise back into this area. Remember what I told you guys about the market, first of all, creating another false resistance. You can see the market rise to this area, and it did as if you want to start selling. You see all these early sellers that came in from here. The market will eventually, they have their stop losses in this zone. The market will eventually come and stop them out. I want to go into the market when the market have already stopped out the early sellers. That puts me into an edge that when I place my stop loss, I know that the market have already done its manipulation. The market has taken its own share of the market. The market likes to take its own share first. The market, think as the market as the, is the market owner. He owns the market. He wants to make his own money before everybody does. So that is why he will first of all take his own share. And I want the market to take his share of whatever that we are doing. That is when I want to come in. So all these early sellers that are here, the market will be, their stop losses are here. Even maybe still stretch a bit here because of some of these sellers that are here too. I want to see the market coming to take all of them out. When the market does that, that is when I want to try. I don't want to be among the early people. Guys, don't be among the early sellers. Don't be among the early sellers. Allow them to come in. Allow those FOMO traders. They are always afraid. They are always jittering. They want to make money. Guys, let's go in. The market is going. Don't be among them. Allow them to come in. When the market have stopped them out, that is when you should come in. That will give you a lot of peace. So, in the coming days, I want to see the market rise. I want to see the Euro USD rise to this point. Stop out all these early sellers. Then I will join. Once I see my sellers come back in, I will join them. So, the Euro USD, we are looking just to sell the Euro USD. You can see the market is close to our area of value, but it's not yet there. I want to see a rise more to this point. Then when the sellers come in, I will join the sellers, at this point. So for the Euro USD, we'll be waiting for it to rise, join the sellers at this point. TP1 can come back down to this area. Then TP2, this is where we'll keep our TP2. Let me show you guys. Go back to the daily time frame. Go back to the daily time frame. Okay, so at this point is where I want to keep my TP2. TP2 can be here. TP2 can be here. TP2 can be here. You see this point here on the daily time frame, and there's something about this level too that okay, cool. So you'll see this. Okay, this is our line of departure. If you take this movement from here to here and move it and take from here to here, you can see that this way it got to. So that's where we'll be taking our TP2. Our TP1 will be, this is the daily time frame, so our TP1 will be somewhere here. Maybe we'll use this one, TP1 here, then TP2 here. Let's go back to the 4-hour time frame. Okay, so our TP2 will be at this level. At this level, TP2 here, TP1 at this point. Okay. So for the Euro USD, we'll be waiting for price to rise to this. We're waiting for price to rise to this our zone here. Take out all these early sellers. Even I'm suspecting these sellers that are here, the market will also take them out. So when you see the market coming here, don't be scared. Just know that as long as this line of departure, as long as this supply area is holding, you are still bearish. So if the market continues to rise, don't FOMO. Don't FOMO. Allow it to rise. Just keep waiting. If you decide to fly above here, then next week we'll wait for pullback and we buy. But for now, we are bearish until we see price close above this supply area. So we'll be waiting for price to rise into this resistance area. From there, we'll wait for the sellers to come in, then we'll join them. So let's move over to the next pair, which is the gold. So for the gold, we did a trade plan expecting to buy the gold, but what will happen is that we saw the market drop down without giving us that buy entry. And that is why I told you guys that it's okay if you draw a trade plan and the market did not give you that plan. You must understand that when you draw a trade plan, it's not compulsory that the market will give you that plan. The market did not give you that plan, let it be. The one that it give you, you take. You can see we took BTC USD buy entry last week. Last week also we saw some we took some sell entry, which are good one. Even the Nasdaq, so I will still got there. We got also Nasdaq sell. The one that didn't give you an entry, leave it. Take the one that give you an entry. Once you draw your trade plan, you must follow your plan. Forget about what the market is doing. Follow your trade plan. So last week we did a plan for the gold that we were going to buy the gold, but the gold did not give us that plan. And that is why I told you guys that when you see the market drop like this, don't start saying I've missed the trade. You did not miss anything. You did not miss anything. The market has dropped fine. It has shown you its direction. It has shown you that this is what I actually want to do. It's for you now to decide now. After the market have done its thing, it's for you now to decide, okay, after the market have done it, what is my next line of action? So for the gold, we've seen that this area now is our line of departure. This is the supply area. When the market, this is the supply area. This guy is in charge of all these moves happening here. He came down here, manipulate, went up and come down. So in the coming days, I'll be expecting to see the market. Now I've established that the Euro USD is bearish, even though there's a demand area here. There's a demand area here. I'll come back to that. So but with what we saw happen last week, the market broke below this 200 EMA, trending down. We can see that the Euro USD, the gold is currently bearish. So what we'll be waiting for is to see a good resistance area where we want the gold to rise to. And I'm saying that this area here is a good one. I can see this week here. I can see that, okay, this area is a good one. So in the coming days, I'll be expecting the gold to rise to this area, around this area. The gold rise to this area. So from there, I would like to execute. If I take my Fibonacci from this line of departure to this area, so I can see that I'm having my 61.8, 61.8 at this area. And you guys know, once I've spotted a good resistance area, I want to see that area lining up with my 61.8. You can see my Fibonacci 61.8 is this area. So in the coming in this coming week, I was expecting the gold to rise to this area. Expecting the gold to rise to this area. Then from there, I wait for the sellers to come in. Then I join the sellers. So we're looking to sell the gold. I pull back to this area. Wait for the sellers to come in at this area, and we'll join them. But guys, there's another thing again with the gold. I can see that it is likely that we might get a good, buy setup at this area, because I can see that this area is a good demand area. This is a good demand area. I can see this area. This is the line chart. You can see this area here. You can see this area acted as a resistance. The price came down, blew all the way to the upside, came back down. That area acted as a support, went back up. The buyers from this point, they took the price up. Now the price is there. There's high chances that these buyers that took the market to the upside, they will come back here. So the market is there now, even though that we can see a very strong bearish sign. So at this point where the market is now, what we'll be waiting for is, let me just take this zone and take this week. If you get a clean buy setup at this point, something like this, you can go long on the gold. You can buy the gold while waiting for the sell. Because why are we buying the gold? Why are we buying the gold? Because of this demand area. Because of this demand area. So at this demand area, if the buyers come back in, you can join them and take the price back up here. You enter from here and you take the price back up. Exit, wait for the sellers to come in, then you join the sellers to take the price down. So for the gold, because of this demand area, if we get a buy entry, we will buy while waiting for the sell entry. At this point where the gold is now, and that's the mistake some traders make. Many of them did not join this move here. People like to do things when everybody have already done it. When everybody is aware of something, that thing is already late. I repeat, when everybody is aware of something, that thing is already late. For you to be a great trader, you must be able to anticipate the move before it happens. Not that you just jump into trade without getting confirmation, but you must be able to anticipate the move before it happens. It's just like what is happening today in the news. When you see things all over the news, when people start telling you about an investment, that investment has already gone bad. When the investment is still good, you hardly hear about it. When the investment is still good, you hardly hear about it. You can see before the Bitcoin dropped to where it is now, they were promoting the Bitcoin all over the place, calling influencers to influence people to buy the Bitcoin. And before you know it, the Bitcoin started dropping. They've already known, the big boss have already known that they want to liquidate their positions in the Bitcoin. So what am I trying to say? Now, people who did not sell the gold before, all of them will want to sell the gold now. So, and the gold is at a demand area. This is a strong demand area. From this point, the market move up. The market has memory. These are people here who bought the gold. They remember that, sometime in February, 2nd of February, we bought the gold from here and the gold went up. The gold is back at that level. Let's buy again. This is how people think in the market. You must understand that you are dealing with people. When people remember that they did something at a particular time and that thing was favorable, when that similar time occur again, they want to do that thing again. This is human psychology. So even though that the gold is bearish, you cannot sell here because of this demand area. If there's anything you should be looking for, it is these buyers who bought this market from here that want to come back in here. So the only place you are permitted, I'm not saying permitted, guys, you can do your thing anyway. The only place that is advisable to sell the gold is from this area. When the gold rises to this area, you can look for a sell entry here. Or you wait and see a break outside this demand area, then a pullback, this thing I'm doing is just it's not as if it must be an exact level. I'm just, I hope you understand what I'm trying to do. So you must see a significant break below this demand area, a pullback, then you come in when the sellers are trying to come in from here, then you can take the price down. Don't start selling from this place. Allow the gold to rise to this resistance area, or allow it to break below this demand area or this support area. Pull back to the the support will now turn to resistance. Pull back to it. Then when the sellers come back, you can join them here. So it's either you sell from here. It's either you sell from here or you sell from here. I repeat, it's either you sell from here or you sell from here. At this point, you watch. If the buyers come in, you can join them because of this demand area. So for the gold, we'll be looking at two things in this coming week. Forget a clean buy entry from here. We'll buy, take the price there, exit when we see the sellers, then join them from here and take the price down. So let's move over to the next pair, which is the Nasdaq. So we can see the Nasdaq. We sold the Nasdaq like I told us last week that we'll be selling the Nasdaq. The market is in a range, and we saw price. I told you guys that price will eventually come back to this area. I told you that when this market dropped down to this place, the big boys did not fill in their entry. I told us the market will be coming back there, and that's exactly what the market did. The Nasdaq is in a range. So you can see the market came back, blast down, stop out all this people buying this market and come back. So what I'll be expecting in the coming week is to see the buyers come back. These buyers, I told us last week that these buyers that came in here, many of them did not fill in their buy orders. I'm expecting the buyers to come back here. So because the Nasdaq is bearish, does not mean I will start selling here. You can't be selling here. Please don't sell at support. You only look for buyer support if you get. Where you should look for your sell is your resistance area or your supply area. So for the Nasdaq, the price now is at this demand area. So I'll be looking for a buy entry at this level. I can just zone all this to accommodate this guy that is there. I can even accommodate this new week. So at this area, I'll be looking for the buyers to come back. If I see this, then I'll join the buyers. To take this price back up. Do not sell the Nasdaq unless you see price close below this demand area, just like what we did on the gold. You will see price breaking below this demand area, pull back, then you join when the sellers come back in. You join when the sellers come back in at this point. This is the only situation whereby you can sell the Nasdaq in the coming week. Breakouts, pull back, and you enter when the sellers come back in from this point. At this point where it is, because of this demand area, see, it was acting as a resistance here. Breakouts, came back, used it as a support, went back up, came back, used it as a support again, went back up. From this supply area, it came back down. The market came here, but the big boys did not fill in their order, went up and is there now, expecting them to come back here and buy the euro. So we're looking to buy the euro USD from this point. So let's go to the next pair, which is the US oil. So the US oil, I'm still in my buy trade on the US oil, but the market have refused to move. It has been consolidating. The market could either pull back or consolidate. As you can see, the US oil has been pulling back. I bought from this place. I'm still holding. My stop loss is tightly here. The market comes down to stop me out, then I will just exit my position. But I've been holding to see. I'm expecting in the coming days for the US oil to continue the rise. Maybe during the weekend we'll see the market rising to this point. see the market rising. But if you've not bought the US oil, do not buy from here. No, I told you the other, I told us last week, if you've not bought the US oil, do not buy. You can't buy from here. You must wait for the market to pull back. You must wait for the market to pull back. If you get a pullback, yeah, maybe by then the market will stop me out. Then if you give another entry, I will go in. Wait for a pullback here. If you get, the market pulls back maybe into this level, or maybe if you get a pullback here, whichever one you get, you enter, you join the buyers, and you take the price back up here. So for the US oil, we are still bullish on the US oil. If you get a pullback into this area, with the buyers coming, you join them. TP1 back at this supply area, then TP2, maybe you can leave it at the $200 per barrel. We don't know where the oil is going to. I pray for the war to stop. So, but I know the oil, has reached a point where it wants to reverse to the upside. The war is just making it to move, erratically. Ordinarily, I've had the plan to buy the US oil. So guys, let's just do a quick recap of what we have. So for the Bitcoin, we'll be expecting to buy the Bitcoin from this point. We'll get a clean buy entry from here. We'll buy, then when the price rises to this area, we will exit our buy and take our sell. So let's write out the trade plan. So for the Bitcoin, you can look for a buy around this area. I don't know if this market is going to pull back, but if you pull back, you can take your buy from here. If you get a clean buy here, sometimes it might just do this messy move and just launch from there. So whichever way, if you get a buy from here, and if you want to even enter now, I don't think the stop loss from here, you can put your stop loss here. So for the Bitcoin, we'll be looking for buy at this area, stop loss below here, entry, let's say entry at around this place, 773.63, stop loss below here, 68.241. As TP1, just exit at this place here because of this guy here. Can just exit here. Yeah. Then for the main entry, which is the sell, we're looking for the sell entry at this point, 75.134. Stop loss can be here, 79.433. TP1 here, 62.743. Then TP2 will be at 50,000. So for the Euro USD, want to sell the Euro USD, wait for the price to rise to this point here. Let's just use here 1.16189. Stop loss at this point, 1.16793. TP1 at this point, 1.14215. Then your TP2 at this point, 1.12899. And let's move over to the next pair, which is the gold. So for the gold, also we'll be having the same similar situation like we'll have for the Bitcoin. If you get a buy entry at this point, 4505, or maybe 4500. If you get a buy entry at 4500, take your buy, stop loss at 43.66. When the market rises to this area at 49, let's say 49.50, you can exit your buy. If you see the sellers, you go short, entry at 49.50, stop loss at maybe at 5100. You can keep your stop loss at 5100. Then TP1 at 4509. Then your TP2, you can leave your TP2 below to see if this market will break below this area. This market will break below this area. Maybe you can have your TP2 at somewhere around this point at 39.47. So let's move over to the next pair, which is the Nasdaq. So at Nasdaq, we'll be looking to buy the Nasdaq at the level where the Nasdaq is now. Wait for the buyers to come in, maybe the buy go up, come down at 23.989. You buy the Nasdaq, stop loss below this level at 23.705. The TP1 can come here. TP1 can come here at 24,626. Then TP2 target this zone here. TP2 can be here at 25,740. Then for the US oil, wait for price to pull back to this level at $93 per barrel. Price pull back to this level, you take your entry. Stop loss below here at $89 per barrel, and TP1 at 100 and just at 115, 115. TP1 at 115. The TP2 can be at $200 or $180. So guys, thank you, for staying to this end. Drop me a comment, hit the like button, and please subscribe to the channel. Until I see you next week, God bless you.